Hello, good afternoon. Welcome to the marketplace. Coming up, the rate of depreciation of the cedi against the dollar forecast at almost 5% by the end of the year. This is far better than the forecast over the same period last year. Ahead, we'll find out what is informing this projection. Also coming up, Ghana Airports Company has been reacting to claims made by the former President John Mahama over its indebtedness. We'll bring you an update. And if you love rice, you may love this one. Researchers are developing disease-resistant varieties. We have a report just ahead. My name is Darryl Kwao. Thanks for being with us. Details right after this break. In our first story this afternoon, the cedi is projected to end the year with a rate of depreciation of almost 5%. This will be far better than the 8.33 percentage points loss over the same period last year. Now, since January 2020, the cedi has lost 2.60% in value to the American greenback. What can we attribute to this latest forecast? Joining me via Zoom is Kari Mate, an economist with Data Bank Research. Great to have you this afternoon, Kari. So explain to us why we expect a slower rate of depreciation.
Well, thanks for having me, Daryl. And I think one of the most important contributors to the stability of the currency is last year, precisely in the fourth quarter of the year, the Bank of Ghana introduced the FX forward auctions. Now, what this does is to get the market to bid for a certain tenor, short-term tenor of FX to be delivered on the market at specified maturities, and they deposit cedi equivalent of that amount that they require. That has helped to guide the market as far as the exchange rate part is concerned, and that has helped to reduce the apprehension on the market. And so currently, the market is very expectant of a certain amount of exchange rate over every rolling 2 weeks, and that helps to anchor exchange rate expectations. But notwithstanding that, again, given the current COVID pandemic, what we have seen across the continent is that countries that depend significantly on one commodity, for instance, crude oil, and have suffered shocks, negative shocks to their prices, are suffering exchange rate volatility. But thankfully, with the case of Ghana, we are a bit more diversified in our exports revenue, but then increased concentration on gold inflows. Given these uncertain times and the safe haven appeal of gold is also helping our FX inflows. So we have a strong buffer to support the currency stability, hence the better performance of the cedi this year.
You make a mention of some internal factors or local factors. How about the external factors? For instance, how the U.S. economy is performing right now?
Well, yes, and it is also one that you cannot also discount because currently, I mean, over the past few weeks or so, at least a month or so, the US dollar has actually been on the back foot against global currencies, largely because, one, the rate of COVID infection keeps rising, and as at now, the main concern is the rate of increase amongst the children and the economically active group, and that's actually raising concerns about the economic outlook for the US. Then also the concerns about whether the November 2020 elections will go on as planned and elevating policy and political risk to that economy. So the US dollar is also taking a hit, and that is also helping our currency in this part of the world.
Okay, so this slow rate of depreciation is expected in the short to medium term, I suppose. How does this help us in this period of the COVID-19 pandemic? As I can imagine, once the pandemic is over, things are going to get back to normal, right? You're going to start importing once again, and that could also affect the cedi's performance.
Well, yes, you are very correct. And so at least in the short term, whilst things are stable, there are a number of benefits. For instance, the imported inflation, I mean, the exchange rate effect on prices of goods imported will be minimized, and so the rate of increase in price levels will also be contained. Then from the public sector or fiscal angle, the impact of a sharp depreciation on the currency on the government debt service burden will also be contained or minimized. So then government will not have to sacrifice a lot more of revenue to pay interest on foreign currency debt because the currency is stable. Having said that, I think one of the things, the benefit we can also gain from this COVID situation is that it caused us to increasingly look inwards for production of things we were initially importing. Now, into the medium term, if we get a handle on this domestic production, it should substitute imports and help us that in the times when the currency volatility returns, we would also have a domestic production substitute in order to cushion ourselves from higher prices.
Okay, and that's why I'm a bit skeptical, a bit, how should I say it, maybe a bit reluctant to be excited about this latest development. So let's look at the long term. So while we are making inroads within the short term, what should we be looking at in the long term?
Well, I am also not overly optimistic beyond the short term, but then I am cautious. I am also not overly pessimistic either, because the truth is the government, I mean, the Bank of Ghana has introduced certain measures into the system, the domestic FX market, that should anchor beyond the short term currency stability or performance. I talked about the FX forward auctions, but they've also launched a platform that will allow for transparent trading of FX, so that bids and offer prices can be seen by all parties engaged in an FX transaction. That should help price discovery and efficient pricing of the exchange rate. But then if you go beyond to look at the downside risks, it is important to also be cautious. And that's why you can't be overly optimistic, because we know the problems with the fiscal account, the fact that government is running elevated deficit, and that might cause some shocks to the currency beyond the short term. So we need to be very cautious, like you are saying.
Cautious optimism, that's the word, the expression I was looking for. Thanks very much indeed, Courage Martin, for your analysis as always. He's an economist with Data Bank Research. Always great to talk to you, Courage.
Pleasure.
Now, this is the best time Ghana can take advantage of the COVID-19 pandemic to request for debt relief from the International Monetary Fund and the World Bank. That's according to the head of financial advisory at Deloitte, Ghana. He believes that aside from the many programs introduced by the government to revive the economy, there are many justifications for the country to get debt relief similar to what was given in the year 2001, which benefited the country. He was speaking to Joy Business's Eben Sabute on a review done by Deloitte on the mid-year supplementary budget.
It has had to resort to all the other sources of raising revenue. You will see that even though government is bent on reducing or bringing some tax concessions, particularly for certain sectors that have been hardest hit by the COVID, government is still enforcing other laws and prosecuting tax offenders and trying to bring a lot more people into the tax net, which is a very good policy. I think government should still focus on that, because our ability to raise internal revenue, I think we still have the ability to do that. But for one or two reasons, we have not been able to. A very good example is property rates. There are people who are living in luxurious homes who've never paid property rates. And those properties are identifiable. There's no way the person can hide that property. And so if we are not able to tax even properties, then you know that we are really struggling to raise the necessary revenue to support our budgets. Also on the point about borrowing, we are in a pandemic situation, and therefore, as you see with a lot of other countries, over 80 countries have applied to the IMF for support. And so we are not the exception. We are part of the lot. But I think we'll go back to the age-old mantra that there has to be a smart borrowing. We should borrow the money and invest them in self-financing projects. That reduces the debt to GDP ratio. Because if you invest in tangible projects, those tangible projects increases the value of your GDP. And therefore, your debt to GDP ratio increases even though you are still borrowing. And so we should take advantage of the pandemic and also apply for the debt relief from international partners. I think one of the benefits we got around about the year 2000 and 2001 was when we opted for the HIPC. And it helped us because it gave government a lot of relief to invest in other projects. If we use the pandemic as a situation to make a strong case to our development partners to do some debt cancellation, we will get a lot of relief.
But do we have enough justification for that?
I mean, there's a lot of justification for that. And I think the conversation has started. And government should strongly push it and join other developing countries to push that conversation strongly, because we have enough justification to do it. our debt stock is not sustainable. It's not something that we can continue doing. And so the way to do it is to have some relief. And so if we get some debt cancellation, particularly our interest commitment, if you look at our total expenditure, our interest payments form the second significant component after compensation. So we borrow to pay loans that we have already contracted. This is not sustainable. And so the way to do it is to have some relief so that our interest component reduces significantly and our investment in capital expenditure increases. If you do that, your debt to GDP ratio reduces. Currently, our debt to GDP ratio is increasing because we borrow, but we're probably not investing in resources that will increase the value of our goods and services in the country.
Beyond giving out of small stimulus packages and all that, what other ways do you think government can go to revive the economy, i.e. helping industries and the private sector to come back on their track?
Excellent. I think we've made a strong point at Deloitte in our mid-year review statement. One of the things that we suggested to government is to look at the sectors that have been hit with the pandemic and consider reducing the corporate tax rate of 25% to about 20%. So currently, as we speak, it's only the hospitality sector that by the pandemic that enjoys 22% tax. But the other sectors, aviation, oil and gas and others, the BDCs are still choking with taxes. And so we're thinking that to stimulate growth, because the way to do it is that employees, people are struggling to pay their workers. And if there are layoffs, it has ripple effect on government and then our total income or GDP. So one of the ways to do it is to stimulate growth, is to allow this business to keep, to still stay in business. If they continue to stay in business, they produce. And we get the benefit of that in taxes and revenue to government. So that's one of the things. And then one of the ways that we propose to government is also to provide some form of tax credits for companies that decide to keep their employees. Let's say if a company decides to keep 80% of the employees for the next 6 months, they get automatic tax credit for the compensation that they pay to these employees or the remuneration that's paid to these employees. So if the person is spending about 80,000 on these employees for the next 6 months, that 80,000 is an automatic tax credit. It's a motivation and as incentive for these companies to keep their employees rather than to lay them off.
And that was Eben Sabate speaking extensively to Yalate, head of the Financial Advice Unit of Deloitte. Welcome back to the marketplace. We begin this next half with food matters. Now, scientists at the Crop Research Institute are incorporating disease-resistant genes into popular aromatic varieties of rice. Rice yellow mottle virus and rice blast disease are said to be the major causes of crop loss. Now, researchers say the new method over the next 5 years is part of measures to avoid the impact of outbreaks like COVID-19. There's more in this report.
What we are doing here at the moment is that we are trying to incorporate disease resistance genes into these popular aromatic varieties. The major diseases in Ghana are rice yellow mottle virus and then rice blast diseases, and they can be very devastating. So
what do they do to the plant, the crop?
So for rice yellow mottle, that's why it's called yellow mottle. You see the leaf starts yellowing, yes, and then it becomes stunted, and then when the panicles or the flowers come, it darkens, okay, and then you don't get the spikelets filling. So you see the spikelet there, but it's just chaff.
The conventional method could take scientists up to 10 years to produce high-yielding quality and disease-resistant varieties.
And we are trying to incorporate those disease resistances into the popular aromatic varieties. But this is a painstakingly slow process, okay, because you have to cross the two parents. You grow your seed, and that is called the first filial generation or the F1. Then you have to go through a next stage where you get the second failure, the F2, and then that is where it will segregate. And then you have all sorts of gene combinations from both parents. Okay, so if you select something in the F2, it's not stable yet. You have to grow it for about 6 times before you are able to stabilize it, and then you test it.
Senior researcher and rice breeder Dr. Maxwell Darko Asante says the new varieties are expected to improve production and produce quality.
In the last 10 or so years, okay, we have come out with very good jasmine type varieties. Okay, there's one called CRI Agra rice, which is very popular. Many people are planting it under the Planting for Food and Jobs program. We also have CRI Amankwetia. We also have Jasmine 85 or Boa rice, which was released by our colleagues in Sari. Okay, but the approach to breeding is that breeding is a product pipeline. Okay, the whole aim is also to be able to give farmers something which is higher yielding, something which has better grain quality. And when I say grain quality in Ghana, I mean long grain, aroma, and something that cooks soft. Okay, and then also has something that has resistance to the diseases. Okay.
Lack of general appreciation of the struggle of scientists to put new product on the market makes innovation difficult. Currently, Ghana needs a little over 1 million metric tons of milled rice to feed her population annually. Dr. Darko Asante says that can be achieved if government supports research and other activities in the value chain.
So there's no need for Ghana to import rice. Okay, we can produce rice to feed Ghana. We only need a little over 1 million metric tons of milled rice to feed Ghana. So government should keep on doing what it's doing as far as the Planting for Food and Jobs is concerned, but also support research where all these varieties are developed, okay, and then support everyone else in the value chain, because it's a value chain issue, okay. So no matter the efforts we put in here, okay, if the other parts of the value chain are broken, we don't see the bigger national impact. So
Ghana is striving to reduce rice importation as government targets to end imports altogether by 2022. The Ministry of Food and Agriculture says it has made some progress with maize. A report by Mahmoud Mohammed Nuruddin.
Moving on to one of our other top stories this afternoon, the Ghana Airports Company has rejected claims by former President John Mahama that its indebtedness forced the company to opt for the sale of the Kotoka International Airport. In a statement, the Airports Company rejected all the claims by the former president, describing them as untrue. We'll bring you an update in a moment. First, this report filed by Fred Duho on the former president's claims.
Former President John Mahama says privatization of the Kotoka International Airport should not be an option even if government is in desperate need of money to revamp operations. He suggested that government can decide to sell portions of land around the airport in order to generate the needed revenue.
And I think that is absolutely wrong. Even if you sold some of the lands around the airport, you'll be able to raise far more than $70 million. So if it's $70 million we want, you know, I mean, the other ways of raising it, the value of the lands around the airport alone are far in excess of $70 million.
He further stressed the need for government to consider partnership and not surrender 66% shares of the airport ownership.
In giving a concession to take over the airport and run it. The concession is a disguise. Behind that, in the period of the concession, 66% of the ownership share of the airport will be transferred to the Turkish company at a cost of $70 million.
Meanwhile, the aviation minister, Joseph Kofiada, in an earlier interview with Charles Aite, maintained that the airport needs strategic investors.
And I think going forward, we have to look at any of the strategic partnership. And that should bring a lot more to Ghana Airport Company. And so that was something that we're looking at in terms of what we really do with any entity that sees potential in Ghana, that wants to be part of the operations of Ghana, Ghana's aviation sector.
All right, my colleague Charles Aite has been going through the statement from the Ghana Airports Company Limited. Of course, Charles, you also have been following the story for us. So let's begin with what the statement says. What does it respond to?
Well, Darrell, the statement has refuted most of the claims that the former president made regarding the purported sale of the Kotoka International Airport. Sections of the statement reads that, of course, the claim that an investment of $600 million was made at the Kotoka International Airport is incorrect, and it further states that the amount may be in reference to the funding of projects in all airports, including the $130 million runway project at Tamale Airport and the $25 million project as well at the whole airport. So, I mean, the former president made all these claims, we do know, based on a particular interview he granted in the Volta region. But management of the Airport Company Limited say, and they're arguing in strong words, that each and every statement the former president uttered is wrong.
All right. Thanks very much for the update, Charles Aite, joining us from the Joy Business Newsroom. Let's move on to our final story for this afternoon, which has got to do with the minority leader addressing the press conference yesterday about the shareholders of Consolidated Bank, asking government to come clean on who the shareholders are. According to the minority leader, his request is based on recent commitments made to the financial institution.
When government issued the sovereign bond of 2018, government again reported, and I'm quoting, that it was dedicating an amount of 450 million Ghana cedis for CBG to finance the sector bailout. So 450 million of state resources used to finance CBG. We demand, who are the owners of CBG? We need to know, because public money is being invested in CBG. More importantly, we are demanding that the 450 million so spent of the bond issuance money, is it equity or a loan? I do not have the answers, and I'm demanding access to that investment of state resources.
Well, Mr. Idrisu at that press conference also demanded an audit of money paid to customers of collapsed financial institutions. And we heard from the MPP MP on the Finance Committee of Parliament saying an audit is not necessary. And that's it for the marketplace this afternoon. My name is Darrell Kwab. Thanks for watching.